we're going to start with an earnings alert. It's Amazon, the stock touching new all-time highs. This after reporting a blowout quarter, earnings and revenues both topping expectations. The cloud, of course, continues to be a big engine of profitability for the company. Amazon also giving upbeat guidance for the current quarter, and the company's conference call will kick off within the hour. As you see, the stock is up almost 12% in the after hours. That would put it back in the trillion-dollar club. That would be the first time since September of 2018. Of course, it would join Microsoft and the leader still, Apple, there. Guy, let's start with you. Give me your take on these numbers.
It's a staggering quarter. I mean, the numbers aside, 4.5%, I think, operating margins are just a ridiculous number. I mean, I clearly didn't see this coming. I don't think a lot of people did in terms of the magnitude of the EPS beat. It's staggering. But 2025, you're sort of alluding to in terms of market cap. You know, the previous all-time high back the summer of 18, again, the summer of this 19, we saw a similar level. So this 2025 level is now your line in the sand. I understand the reaction in the aftermarket to this because I think a lot of people just didn't see it coming or probably chasing. But I think it's a little euphoric here. I think you got to look for that pullback, probably that previous all-time high.
Although not euphoric when you consider just how unloved this stock has been. And you talked about the underperformance, and it's underperformed. Essentially, think of the blowout earnings we've had from the other big boys, Apple and Microsoft. Amazon is essentially a strong number 3 in the NASDAQ 100, and it's underperformed that group by 20% in the last 6 months. So the bar going in here was very, very low. And not surprisingly, it's AWS that's the victor. If you look at that's 67% of their profit. And even in a competitive landscape that we think cloud is becoming, these guys are dominant.
But I think it's a matter of positioning. You guys both have said that. Where you have Google and you have Microsoft for AWS, I would imagine that margins are going to be compressed going forward. This after hours means that everyone was offsides. It doesn't mean that there's really conviction here. I don't see it that way. I would probably be, most likely, I would fade this.
You think this is short cover?
No. I think that people were not expecting them to have this type of a blowout number.
Bar was low.
After lagging, and especially after Bezos had said that this was going to be an investment cycle. I think for that, it caught a lot of investors off guard, so I think it might be overdone the next day or so.
I think that's true, but I think also the guidance was a little bit more optimistic. I don't think they're normally in the business of giving optimistic guidance. And so I think that, I don't know how much of the move that's good for, but it's something. I think that the read-through probably to, given Microsoft's cloud and their cloud here, I think probably it should be good for Google Cloud. We'll see next week.
Yeah, well, there was some concern with those very strong Microsoft numbers that perhaps the market was not quite growing as quickly as Microsoft was starting to take a little more market share with Azure. Perhaps that's been answered. I mean, $9.2 billion in operating income from AWS.
And with the negative headwind recently from the Pentagon, from Jedi.
Right,
so that
Jedi.
was something where it got investors.
Perhaps is there because they have become more competitive. AWS was the leader for so long, the clear leader. And obviously, Google also now, Guy, is trying to compete.
No question about it. I mean, it goes to show maybe the pie's big enough for everybody. I think that's sort of Karen's point. It might be true, but I got to tell you, in terms of the stock, remember, last quarter is when the thing cratered down to 1750 and people running for the exit doors. We actually had a conversation that day. I remember being on the show saying if you're selling it today, you're probably doing it wrong. You could probably make the same argument now in terms if you're buying it now, you're probably doing it wrong. But with that said, the magnitude of this quarter is pretty astounding to me.
All right, let's get a little bit more on the quarter as well from Josh Lipton, who joins us right now. Josh, this call hasn't started yet. Always important to point out, you never know what Amazon will share on the call in terms of their guidance, in terms of filling us in a bit more on how much they're going to spend to get things to us now by the minute, perhaps, instead of the hour.
Yeah, no, fair point, Dave. The call does start in about half an hour here. Just to add to what you guys are saying, you look at the 3 big operating segments all beat here. North America, better than expected at 53.7 billion. International also beat 23.8 billion, as you all were discussing. AWS grew 34%. That was also better than expected at 9.95 billion. Analysts had thought it'd come in around 9.8 billion. Obviously, there's been some concern there about the growth rate of that cloud computing business. AWS operating margins 26%, so ticking up from Q3. There was, now the official call starts at 5:30. The CFO, Brian Olsavsky, did have a media call, though. Let me just bring you some of his highlights on that call with reporters. He first talked about just the greater efficiency the company is seeing. They are getting more efficient, he said, in their transportation and their warehouses. They are getting inventory closer to customers, of course. They've been spending a lot of time and money reducing shipping times to customers, handling product, he says, more fluidly. Prime membership, new number they gave us here today, too. They have now exceeded 150 million paid Prime members. Last time we got that bogey was a couple years ago, 2018. They said around 100 million. I asked about why that is. He said, listen, it was certainly accelerated by starting that one-day program. He talked about the benefits, which he says are popular with folks, free grocery, video benefits, and media benefits. Coronavirus, he was asked about that as well. He said, listen, no update right now on their supply chain. They are starting, and we've heard this from a number of companies, putting travel restrictions in place to protect their people. No visibility yet, Joe, on Q1 impact. The call with analysts is starting in about 25 minutes. We'll be on it, and we'll bring you guys those headlines. Back to you, David.
Okay, Josh, thank you. Josh Lipton. I mean, Guy, you made this point, but Amazon had been the laggard, of course, for some time, in fact, while the rest of the big cap techs, went ballistic, went parabolic, whether it's Microsoft, Apple, Facebook, obviously down today, but still up more than Amazon, at least until we get in tomorrow morning and see where the stock really opens.
So should the stock, I mean, I guess the question is, I mean, at this point, what do you, if you just walked in, if you just landed from another planet, what do you do with Amazon here? And I say, you take a look at the quarter, you sort of put it in your...
By the way, they probably deliver you from that other planet in less than a day. Yeah, it's just a bad joke, but you never know.
But I think you look for that pullback to previous all-time high, which is 2025. I still think you have a conference call you got to get ahead of. And again, they talked about a spend. We'll see if that comes out again. I think that could still scare some people.
I think it's important for investors to also understand how the street tends to value this stock, which includes some multiple. It's a blended multiple, and it's essentially some multiple of AWS and then the core. And the core, which is obviously astronomical in terms of top line, but you usually give about a 10 times revenue number on AWS. So the numbers are really pretty easy to crunch this math right now. That makes it $1 trillion company if you go 10 times, which is where the street largely goes. In fact, Deutsche Bank just took them up to 11 times revenues. That leaves another 30% in your valuation to put this at $1.3 trillion, $1.4 trillion, which leaves you about 30% upside if you want to listen to those valuations.
How about when off of these results, now I hate to get negative on it, but off of these results, how quickly we're going to hear the spin on the political side about breaking up this company? Because when you look at these type of results and you see them dominating every area that they're in video, in the consumers' homes, in AWS, it makes me think that it's going to be politicized in the next couple of weeks. We are a market that trades off of headlines. You could see algos sell this thing really quickly.
I think we're going to start to see analysts kind of jumping all over each other to try to have the high on the street, which I think right now is maybe 2,500, although it is almost universally either an outperform or a buy. There's not really anybody who's negative on it, so it's not like there'll be a giant turn, but I do think we'll start to see targets much higher.
Also, just on the Prime membership, they added the most Prime members ever in this quarter when they've never had a bigger number. I mean, they're greater than 150 million, which again locks people into that ecosystem and means.
But the key is AWS. You said the stat on AWS. It is AWS. The rest of it feeds into the beast, and they're damn good at it. Before this, it was Apple. It was Apple's ecosystem, and now it's become an Amazon world where everything kind of fits in from that core business, and AWS is not as tangible to most people. So it's kind of a weird playoff of it to analyze for a lot of the street.
Yeah, again, $9.2 billion in operating income from AWS during the course of last year on $35 billion in net sales for this company. And that's where the margin is for them as well.